CEMI stock. This is ChemBio Diagnostics. So these guys have been kind of hyping and going crazy, getting ready for the FDA to respond to their COVID-19 tests. So they are, well, we just got a really bad report. The FDA just said that they cannot conclude that these tests are reliable enough to use for the emergency EUA, Emergency Use Authorization. Yeah, so let's see if we can get a closer. Oh, yeah, right here. So that happened. Yeah, this thing just fell off a cliff. So they just basically failed the FDA approval, and they said these tests aren't reliable. And so let's look at this chart a little longer, I guess. And then on the general market, we're getting a mess of volume right now. So we can go talk about the volume on the S&P. Yeah, so here's the longer chart. And it's been in a bear market for a couple of years leading into the crash. And this kind of area here was, during the crash. This is on its own entire thing. It's not really responding much to the crash. But yeah, this is a monster run up just because they're coming out with a COVID test. And then it's just sort of this is the look like coming into that testing result or the response from the FDA. And I think this is an accurate number. We're actually going to start trading down here around 4. So you could see the long-term sort of floor on this stock was around $3. I guess as a day trading thing, if this thing really sells off below the long-term floor of the company, which looked like it was about 3 or something, this could be kind of a stock to play around with. That it could oversell and kind of rebound, just kind of that sort of thing on the, for anyone that likes to play around with that stuff. This is not investment advice, and sorry to ChemBio, FDA says no. And let's take a look at the S&P and see what we're doing pre-market. Oh, okay, so just kind of some more stuff. Yeah, so we're just kind of on this little line here. And so I guess on the technical, there's really no indication of which way this is going to break. This is a high volatility thing. So if we just take a look at the VIX, we had the VIX gap up and pop up above the long-term trend line here into a higher volatility area, and it has not continued to push up. It's kind of flattening out here. Okay, so yeah, it's high volatility, but it's not like running up at a level where it should fall off a cliff or something right here. The VIX is kind of chilling out. This thing's kind of chilling out. It looks like actually most everything is just kind of flat right now, and we're not getting a lot of indicators of anything. Let's look at the dollar. What's the dollar doing? Okay, the dollar's kind of popping. Yeah, so if the dollar does start making a move to the upside, it looks like it may have bottomed here, and it had a good volatile reversal here. And so this kind of a consolidation reversal usually will lead into a decent sized wave. But this thing here put the kind of the run up into question. And so let's see if we break out of here with the dollar. If the dollar does start breaking out to the upside, that's going to be bad for the stock market. And it looks like it is trying to make another move now. So yeah, today I'm just going to be watching like the dollar and the VIX closely and trying to see if there's a signal of what's going to happen. Because right now we're not really getting much. We're not getting much in the way of signals or technicals, I guess. So there's a huge level here where we where we got our top before. And so this is the area that everyone's pointing at for on the technical charts. We got an island top. Everyone's saying we got an island top here. And that's not really what I'm seeing. I mean, I'm seeing a gap here that already got filled. And I'm seeing a gap here that already got filled. And I don't think that's what's going on at all. What I'm looking at is the trend lines. And these are not horizontal trend lines. This is a 2-year trend line that goes back to the 2018 bottom. And that was a bull market support line for the whole bull market off of the 2018 bottom. And this is a 12-year trend line off the bottom of the financial crisis bottom. And that was the 12-year support that held the market up for the 12-year bull run. And so we broke both of these lines, but we made it all the way back up to the top one. And we tested off of it. And we haven't quite broken down yet. So what I'm looking for here is, well, we're just kind of in the middle of nowhere here, and we're not even getting signals of what direction this thing wants to go. So I'm not trying to do any kind of trading until I see what's going on, but basically there's these two lines, the bull market support lines, and if we get up and test this one again, that is a place to short this line. In the bear market case, I mean, for anyone that's bullish, of course, just always buy always buy everything, because the Fed's going to support the market. Oh yeah, I was looking at the balance sheet also. The balance sheet completely flattened out. Like, they barely increased it at all last week, and we're going to get balance sheet stuff today. So I'm going to come back in another video when we get balance sheet information, because the Fed's announcing, oh yeah, they're buying everything up, and they have this huge, whatever they said, like $1 trillion budget to try to buy bonds and stuff like that. But in reality, if you go look at their balance sheet, that thing flattened completely out last week. And if it's flat again this week, that'll be a really opposite to what everyone thinks the Fed is doing. And we're going to actually see the numbers today. So yeah, that's what I'm looking for here. A back test of this line, or a break and a back test of this line. In the bear market case of where to put shorts on, as backtesting major trend lines. And I don't have these horizontal support areas that everybody else puts in here. This is a bubble model, and we're underneath the major trend line on the bubble. So as long as we're underneath here, this is a bear market model. We're high volatility. We have all of the, not just the fundamentals, but like the VIX is high volatility. Oh, and I wanted to talk about the volume. Because this last 2 or 3 months, we've been getting a lot of up trading on the off hours, and a lot of people have been saying that Europe is coming in and buying the US stock market up, and the majority of the up movements on this whole run up have been on off hours trading. And actually the daily cash trading has been relatively flat over this whole bull run. It's been a lot of off hours stuff. And now, since here, the off hours haven't been that positive, and also we just completely switched into a different volume area. I mean, let's go out to like a daily. Let me show you what the volume looked like. Kind of coming into this, this big crash here. We had volume down at super low levels, and then on the dead cat bounce, we got a little pop up in volume, and then on the big consolidation, it went way up. But look where we are. I mean, we're at the volume levels that we are getting on this dead cat bounce. Like, this is major big money trading hands right now, and they look like green sticks. But if you go in on the tighter chart, you can see that this one's mostly red, and this is kind of a mix here. And yeah, so that's what I want to see. That's what I want to see when we actually get into trading today, is what does the balance sheet look like? I mean, if that thing comes out flat, that's going to be a major short indicator. And they keep saying like, oh yeah, we're supporting the market and we have this huge budget to buy bonds and blah 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 blah. And then you look at the balance sheet and they're not buying anything. They're not even expanding it. And then Congress is issuing a mess of treasuries, which takes liquidity out of the market. Um, yeah, that's what I think is happening now. As we're switching into less liquidity, the Fed's buying less, the Treasury is issuing way more bonds, and we're switching from stock buybacks to new share issuance. And so that's a bunch of different kind of fundamentals in the liquidity in the market. And as far as what the volume means, I mean, the volume on its own doesn't mean that the market's going to reverse or something like that. It just means that there's a huge amount, like an institutional amount of people selling off or repositioning, and just a ton of money is changing hands. So what happens right now while this volume is up is going to be really important. And yeah, there's not much going on yet. So I'm going to come back. There's a few other little news flashes that I'm going to hit in some other videos, and definitely want to look at that Fed balance sheet as soon as that comes in today. So not investment advice. Happy trading. I have a little subscribe button around here somewhere. And oh yeah, the playlists. This will go on the coronavirus playlist, talking about these different companies that um, that are trying to develop virus-related technology. I know there's not that much buzz about the coronavirus this week, um, but the numbers in a lot of different countries are starting to increase again, so we might start getting some more news and stuff on that. But if you want to take a look at the coronavirus playlist, I have a bunch of the stocks that are kind of buzzy surrounding the virus, the antibodies, vaccines, the at-home testing, all of that sort of stuff. Um, but yeah, this one, ChemBio just dumped, man. They just failed their FDA approval. Um, but yeah, as far as day trading goes, if they sell off really too far, that could be a spot to kind of play around with some longs, some day trading kind of long stuff. And that's, man, is there anything else even interesting going on right now? What's the VVIX doing? We don't really have anything new. Mm, yeah, there's really there's no signals. There's no signals yet. So we'll see as soon as we get some action in the day trading session what it's actually starting to look like. And happy trading.